Happy holidays, everybody. It's been an awesome year for stocks. The market has been running hot all year long, pretty much. It's the fourth quarter. Let's get into it. So we had an election. It's important to understand, hey, the market's done really well regardless of which party has been in control over time. So the market did very well when Joe Biden was president. The market did very well when Donald Trump was president. That news all by itself shouldn't have that much of an impact to how your portfolio performs. There are three things I want to touch on coming out of the election that are going to have some impact. So number one, well, we saw first of all, Republicans now are in control of the White House, the Senate, and the House of Representatives. So they're going to have some say in what happens here going forward. With a 53 to 47 seat majority in the Senate, they do have some leeway. So the first thing they're looking to do is a corporate tax cut. So the corporate tax rate today is 21%. If they take that down to 15, which is President Trump's plan, that's what he said at least, that's a 6% boost to earnings across the market. So every company out there basically just got a 6% raise. It's going to increase profit margins, increase earnings. That's what stocks reacted to coming out of the election. That's the big news that's going to hit stocks the hardest, have the most impact. And it's good news for stocks. People are saying the market's overpriced, it's overvalued. That might be true, but if you factor in this tax cut, then that valuation comes back into balance a little bit more. So that's impact number one. Number two is the Tax Cuts and Jobs Act is likely to get extended to some extent or some form or fashion. I think you're going to see whether it's a permanent tax cut or they extend what's out there now, you're going to look at probably lower tax rates across the board for a longer period of time, which again, that's good news for the economy. It's more money in people's pockets. How are they going to pay for these things? I don't know. They're going to have to figure that out, but that's the plan. And number three, maybe this one's not a tailwind, maybe this one's a headwind, and it's the idea of tariffs. So I think President Trump's idea is that he can use tariffs to work us into a better deal for the long run. Whether that's going to work, I don't know. What we do know is that every economics book you read will tell you that a tariff is just going to pass on those costs to U.S. consumers. So that, if you put all those three things together, you've got tax cuts, you get kind of a juiced up economy, and then you've got higher prices coming here. These are not deflationary things that are happening. So one thing we do have our eye on, we do think the tailwinds are stronger than the headwinds overall, okay? But one thing we do have our eye on is, does inflation start to creep back up? And if that happens, does the Fed start to pause? Do we keep interest rates where they are? I don't think we see the Fed reverse course and start to hike rates. That would be a pretty bad scenario. But we think it's more positives than negatives. The market has agreed with us so far. One of the best performing areas of the market since the election has been small cap stocks, so smaller companies. These are companies that impose more leverage. They're obviously riskier to invest in, but they're hopeful for the future. Other than that, third quarter earnings numbers really strong. For the most part, companies are outperforming, continuing to grow their expectations going forward. Obviously, the Mag 7 companies, those big 7 tech stocks, have been driving everything for the last couple of years. We're starting to see those earnings numbers kind of flatten off. They're still big, right? Those companies are still growing and AI is real. But it's nice to see, the rest of the markets catching up and hopefully picking up some momentum there. So hopefully we see a more broad participation. But overall, you look at the economy, the unemployment numbers, or the employment numbers, I should say, the labor market, it's really strong. The yield curve is now uninverted. Those two things combined are pointing to a very low chance of a recession. And it's a really good time to be an investor. So you never know what's going to happen in 6 months, in 12 months, but we're still optimistic and we think that this is a good environment for stocks. So Thanks for watching. If you have any thoughts, questions, concerns, don't hesitate to reach out to us.